Okay, we're here for another video in our series with 2020 accounting. We have Darren and Dustin McNutt with us today, and we are tackling the topic of tax season. So what we want to talk about in this video is tax season does not start in April for medical practice owners, which is who you work with, specifically podiatrists. So let's kind of dive into this a little bit. Tell me about some myths that you think your clients, your practice owners believe about tax season. Can you think of any off the top of your head that you just think?
Yeah, definitely. I think one of the biggest myths is that tax season starts and stops, in April.
It's a spring event.
Yeah. So many people look at it like that. They don't do any preparation leading up to it, and then sit down with us. I've had so many clients in the past who I've wanted to work with on an ongoing advisory basis and do some consulting with them, and I've offered it to them, and they just don't see the ROI in it. And then we'll get to tax season, we'll finish their tax return up, we'll be presented to them, then they ask me, so is there anything I could have done to pay less? And the answer is always like, I'm absolutely sure there was. But you didn't want to do that. And so now I'm just recording history and telling you what you owe.
Oh boy. If
you would like to start talking about some tax planning, like we need to start talking now for next year.
Okay, so let's talk more about that. Why is this waiting until April trend such a mistake? I mean, I have some ideas, but talk to me about what you've seen. What happens if they do that?
Nobody likes surprises, right?
Yeah.
And so if you're not planning...
Not with taxes.
No. Nobody likes surprise
surprises,
tax
maybe.
bill. The IRS typically doesn't give good surprises. Not my favorite gift giver.
No.
But if you don't plan for taxes, you can't do anything about them to begin with.
Yeah.
And, planning is more than just, I'm going to spend this amount of money to say, I'm going to buy this huge piece of equipment so I can save, 40% on it.
Yeah.
You want planning to actually work for you and put more money into your pocket.
Yeah.
Yeah. If you don't plan, I've got a lot of clients that in the past have come to me and we do their taxes and they have, what's to them a big bill, whether that be $20,000 or $100,000.
Yeah.
And, you've got to know that that's coming from, up front. You've got to make the proper estimated tax payments, and then you've got to make decisions to decrease that in the best way possible. And so that's why tax planning is so important, so you don't get those surprises.
Yeah.
When we're filing a tax return, that's really just the compliance portion of what the IRS makes us do, and it's really the last stage in the process. And at that point, we're just recording history. Whatever you did last year is what you did, and that's what you're paying taxes on. So that's why the planning process actually means changing the way you're operating, changing what you do, changing the situation. Trying to do your tax planning when at the end of the tax return is kind of like getting to the end of a football game and trying to change the score. It's over. It's done.
Going, what plays should we run now so that the score is different?
Exactly. Yeah. There's nothing you can now where you could have changed that was when it was time to practice.
When the game started. Well, sure. You're even further ahead than I am.
Right.
Yes.
Yeah. You got to practice, and then the game time comes.
Yeah.
Towards the end of the year,
and you've got a plan for the game.
Exactly.
So what are some of the missed opportunities you guys have seen and related to this, where someone waited till the last second, didn't do any real planning for taxes, and then what are some of the biggest missed opportunities that they kind of missed out on?
So many people are just set up with the wrong entity type to begin with.
Really?
Right. Yeah. So that
something that foundational.
Yeah, absolutely.
Wow.
Once you make the decision on how you want to be set up from a tax standpoint, then you can layer on all types of things as far as retirement planning and there's ways to turn everyday normal expenses that you're already spending, into deductions if you do it right and document it properly on the front end. That stuff has to be done during the year. It can't be done in April.
Right. There's no one size fits all solution.
Yeah.
This has to be tailored to each individual business owner for their specific facts and circumstances.
Yeah.
So the same playbook that works for Alabama isn't going to work for Auburn because you've got a different team.
Right.
And so it truly is tailored to each individual. So there's no one thing that you're going to do.
Yeah. I get the question all the time from people that are skeptical, and I'm trying to, work with them on an ongoing basis. And they say, well, what are you going to do that's going to make this worth it to me? And the answer is I don't know.
Yeah.
Like that's we have to go through the process
right.
to figure that out. If I without sitting down and tailoring our services to you, if it was that easy, you wouldn't need me to do it.
Exactly.
The playbook is this thick.
Yeah.
We got to figure out your chapter.
We got to figure out which plays we're going to run in your situation.
Man, that's a great metaphor. So how are you sort of proactively helping people stay ahead of these unpleasant surprises from the IRS? Like, can you give me some sort of practical examples of how does your process kind of work with people?
Yeah. I think the process really starts in the summer when we sit down at that mid-year meeting. Start off with doing some projections for where you're headed financially for the rest of the year. Okay. And then on top of that, we layer, okay, what does that mean from your tax liability standpoint?
Yeah.
Just knowing that right there, you're ahead of 90% of small business owners out there.
Okay.
Then we start looking at what types of things we can do to bring that liability down and start implementing that. And then as we get towards the end of the year, sitting down, updating all of that, making sure you're going into the holiday season knowing what your tax liability is. Then once we get to the April timeframe, when people think is the beginning and end of tax season, now we're actually at the actual end of tax season.
Okay.
Now we're just tying a bow on
We're
it.
just reporting.
We're just reporting. I like to say we're landing the plane.
Yeah.
Like exactly where we're planning on being all along. And that's what leads to a much more stress-free tax life.
Yeah.
I would say it's a relationship. It's not, it's not a one-time thing. So we're not going to deliver a tax plan to you and say, hey, good luck.
Yeah.
And, someone's going to need help implementing that plan. And the plan may change over time.
Right.
And so it's an ongoing engagement. Taxes aren't a one-time-a-year thing.
Right.
It's part of how you operate.
100%.
It needs to be weaved into that.
How often would you sit down with the practice owner and talk about taxes throughout the year?
We typically have at least 3 to 4 meetings that we call, that we're proactively saying like, hey, it's time for us to sit down, and we are coming to the table prepared with an agenda, with everything you need to know to move forward. And then obviously we're open and answer the phone throughout the year. You're not billed extra. We're not nickel and diming every minute on the phone you get a bill for. But the main thing is that, again, we're coming to the table 3 to 4 times a year with an agenda to
talk about taxes.
Right.
Talk about your business overall, not taxes.
Okay.
Talk
just
about
everything.
Your entire business. Yes.
And taxes is just a part of that.
That is just a leg on the stool.
Okay.
Right. And I think Dustin said it, but we've already done a lot of homework for this meeting. We've already done, not just the basic, blocking and tackling the basic accounting and bookkeeping stuff that you'd see somewhere else. Well, we've already looked at projections. We've already taken those projections and run tax projections on them.
Okay.
We've done a whole lot of homework before we ever get to that meeting. And so there's an agenda, there's a plan, and we're executing the plan.
Yeah, that's great. So tell me about the team behind you, because it's not just the two of you, is it?
No, absolutely not. I mean, you're right. And it takes so many people and resources to pull all this together for you. When we sit down for that meeting to go over the projections and the calculations that Darren was speaking to, there's a lot of work behind the scenes that you don't see.
It sounds like it, yeah.
Yeah. So we have our administrative team, we have our analysts, we have our tax managers and the tax team, all pulling different parts of this puzzle together, putting it all together right there. So, we're ready to go in that meeting and give you the value that you're paying for.
Man. So your clients have a whole crew of people working for them.
Absolutely.
Instead of, the instinct, like we were talking about before, is kind of like, well, maybe I can do this myself, or, maybe I can hire someone to do my accounting part-time, but you guys are offering a whole group of people working on there.
I couldn't do this myself.
Yeah.
Right.
We have a process. My favorite football coach that I wish coached for Auburn, but did not, Nick Saban, has a process. And
yes, trust the process.
Trust the process. We that's how we deliver the results that we're able to.
So I'm wondering if you can think of a specific client you've worked with, speaking of just kind of tax planning, where being able to plan proactively for taxes actually made a significant difference for them in their business.
I had a client that thought he was tax planning, and at the end of every year, he would buy another X-ray machine, another piece of equipment. He was never putting money into his pocket by doing it. The planning was always just spend more money to save money. Okay. And that's not tax planning. That's just spending the money yourself so Uncle Sam doesn't get it.
Yeah.
We were able to change his entity structure. We were able to implement some benefit plans for him and his employees, and ended up saving, $100,000.
Wow.
Yeah. I had a client come to me. He was looking to purchase a business, and he sat down and showed me what he was thinking as far as a purchase price, and we were able to sit down and look at the numbers he had been provided by that seller and calculate a value that was probably more in line with what he should be paying.
Okay.
And he was able to take that, go back to them and renegotiate, a better deal as far as a purchase price. But then further, I worked with his lawyer to sit down and look at the tax implications of the deal that he was trying to negotiate with this person, and found some holes in there that were actually going to be pitfalls for him from a tax standpoint. And between the two, I'd say we were able to reduce the purchase price by $100,000, and then probably were able to save him another $200,000 in tax from the just the tax structuring of that deal. So that's meaningful.
That's significant.
It's meaningful.
Yeah.
If you fail to plan, then you plan to fail. And so in this case, you're going to end up overpaying the IRS.
Yeah.
More than you should. And hey, we all should pay our taxes.
Yeah.
We should all pay what the lowest amount legally required by the government. I'm not, tax. We don't do tax fraud. We don't recommend tax fraud.
Yeah.
But the IRS gives us a playbook. It's there in the code.
Yeah.
And
just got to take advantage of it.
Absolutely. It's our duty to take advantage of it.
They're telling you how to do it. You just have to read it, implement it, understand it, right?
Absolutely. There's reasons why the government has provided all these loopholes. They're trying to encourage you. So follow the lead there.
Yeah.
But it does take a special, set of skills that we have acquired to be able to do that, to be able to identify and implement that plan.
Yeah. And nobody becomes a podiatrist so that they can do tax accounting all year, right?
No.
They already have a job that they're passionate about and they want to do. So that's why they need you to come in and do the other parts of it that are equally important, but it's just not what they do.
100%.
Yeah, I think that's really great.
Yeah, I would definitely add that, going back to what we were saying earlier about, how the tax season is really the end of the process. It's really, there should be really no stress during that time period, because it really should just be an administrative function.
Yeah.
That your accountants are taking forward. It's over. The taxes that are owed have already been paid in, and it's just paperwork that your accountant has to do.
Yeah. That's great.
It's not supposed to be like that.
It sounds so much better. I mean,
yeah, this year, I think we filed our last tax return a week before the deadline, the extended deadline.
Okay.
My goal is to take vacation that week next year.
Yeah.
This should not be a stressful thing.
Yeah.
We should have done all the planning and preparation to make this to where you're not getting any last minute phone calls from your accountant.
Yeah.
It should be done.
It should already be taken care of. That's great. Well, thank you guys so much for talking about this. This is Darren and Dustin McNutt from 2020 Accounting. And if you have a need for someone to help with your accounting for your medical practice, specifically if you're a podiatrist, visit their website. They are 2020acct.com. Go check them out and give them a call, and they will be happy to help you.